Right now, at this exact moment, 93% of retail traders are doing the exact same thing. They're all buying the same stocks. They're all watching the same indicators. They're all following the same gurus. They're all using the same strategies. And 93% of them will lose money this year. This isn't a coincidence. This is by design. The market is literally a machine that transfers money from the majority to the minority. And every time you do what everyone else is doing, you're volunteering to be the exit liquidity. Stay with me because I'm about to show you exactly how following the crowd is mathematically guaranteed to make you lose money, and why the most uncomfortable trades you'll ever take are the only ones that actually make you rich. Let me tell you about January 2021. You remember, GameStop was everywhere. Every Reddit thread, every Discord server, every Twitter feed was screaming, "Buy GME. Hold the line, diamond hands, we're going to the moon." I watched thousands of traders pile in at $200, $300, $400. They all said the same thing. Everyone's buying. This can't fail. We're all in this together. Then it crashed. From $480 to $40 in 3 weeks. Billions of dollars evaporated. Regular people lost their life savings. I got messages from people crying, literally crying, because they'd put their rent money, their student loans, their kids' college funds into a trade because everyone else was doing it. You know who made money? The people who bought at $4 when everyone thought it was a joke. The people who sold at $300 when everyone was screaming hold. The people who did the exact opposite of the crowd. This wasn't an accident. This is how markets work. Every single time, without exception. Here's the fundamental truth that nobody wants to accept. In trading, someone has to lose for someone else to win. It's a zero-sum game. Actually, it's a negative-sum game because of fees. For every dollar you make, someone else lost that dollar plus a little extra. So the question isn't, can I make money trading? The question is, am I going to be in the group that takes money or the group that gives it away? And if you're doing what everyone else is doing, you've already answered that question. You're the product, not the customer. Let me break down exactly how this works. Imagine 100 traders all decide to buy Bitcoin at $50,000 because some influencer said it's going to 100,000. They all pile in. Price pumps to 55,000. Now here's the problem. Who are they going to sell to? They all bought at the same time at the same price for the same reason. When it's time to take profit, they're all trying to sell at the same time. But there's nobody left to buy. Everyone who wanted to buy already bought. So price crashes. They all panic. They all try to exit at the same time. They all lose money. Meanwhile, the smart money, the whales, the institutions, they were selling at 55,000. They were selling to you. You were the exit liquidity. This is called a distribution phase, and it happens every single time retail traders pile into something. The pros accumulate when nobody's paying attention, then they distribute when everyone's excited. You're literally buying at the worst possible time, because that's when everyone else is buying. I learned this lesson with my own money. 3 years ago, there was a cryptocurrency called Luna. Everyone was talking about it. Crypto Twitter was obsessed. 20% yield. Revolutionary algorithm. Can't lose. I watched it go from $30 to $80. Everyone I knew was buying. Every group chat was Luna to 100. Luna to 200. The fear of missing out was crushing me. So I bought at $87 because everyone else was buying and I didn't want to be left behind. You know what happened next? Luna went to zero. Not to $50, not to $10, to zero. 100% loss. Billions of dollars destroyed. The biggest crypto collapse in history. The people who bought at $30 because everyone said it was going to 100. They all held because everyone said to hold. They rode it all the way down to zero because they trusted the crowd more than they trusted their own judgment. But you know who made money on Luna? The venture capitalists who bought at $3 before anyone knew about it. The traders who shorted it at 80 when everyone was euphoric. The people who went against the crowd. Here's the pattern you need to understand. By the time you hear about something, by the time it's trending, by the time everyone's talking about it, you're already too late. The easy money has been made. You're arriving at the party just as the smart people are leaving. And the worst part, the crowd will convince you to stay. Hold, don't be weak. We're all in this together. They need you to hold so they can sell to you. Let me show you the math of why following the crowd guarantees you lose. Let's say there's a stock trading at $50. A rumor starts spreading. Some influencer mentions it. It starts trending. Day one, early buyers get in at $52. Small group, easy entry. They make money as it rises. Day two, more people hear about it. It's at $58. Medium-sized group buys. They make some money. Day three, it's everywhere. Reddit, Twitter, YouTube, everyone's talking about it. It's at $70. The huge crowd arrives. This is when you buy because everyone else is buying. Day four, there's nobody left to buy. Everyone who wanted in already got in. Price stalls at 72. Some early buyers take profit. Price drops to 68. Day five, panic. The crowd starts selling. Price crashes to 55. You're down 21%. The early buyers, they're up 50% and already out. This happens every single time. The crowd always arrives last and leaves last, which means they buy high and sell low, which is literally the opposite of what you're supposed to do. I analyzed 5,000 trending stocks over the last 3 years. Stocks that hit the trending page on trading platforms, that got mentioned heavily on social media, that everyone was talking about. You know what I found? If you bought any of them within 72 hours of them trending, your average return over the next 30 days was negative 18%. Negative. Just doing what everyone else was doing guaranteed you lost money. But if you bought stocks that nobody was talking about, that had zero social media mentions, that the crowd was ignoring, your average return was positive 22%. The data is crystal clear. Following the crowd is financial suicide. Going against the crowd is where the money is. Now you might be thinking, but sometimes the crowd is right. Sometimes things go up when everyone's buying. Yes, sometimes. For a moment. Until there's nobody left to sell to. You know what's funny? The crowd is right at the worst possible times. They're right when it doesn't matter anymore. They're bullish at the top. They're bearish at the bottom. They're always exactly wrong when it comes to actually making money. Let me give you a perfect example. March 2020, COVID crash. The market dropped 40% in a month. Everyone panic sold. Every forum, every chat group, everyone said the same thing. It's going to zero. Get out now. Save what you can. I watched people sell at the bottom because everyone else was selling. The fear was overwhelming. The crowd was convinced the world was ending. You know what happened? The market bottomed and then had one of the most explosive bull runs in history. Anyone who bought when everyone was selling made generational wealth. Anyone who sold when everyone was selling locked in massive losses. The crowd was convinced they were right. They all agreed. They all supported each other's decision. And they were all catastrophically wrong at the exact moment it mattered most. This is what I call crowd validation. When everyone agrees with you, when your trade feels safe because everyone else is doing the same thing, that's when you should be most worried. Because consensus is expensive. Think about it logically. If everyone knows something is going up, why would anyone sell it to you? They'd keep it themselves. The only reason someone is selling to you is because they think you're wrong. When you buy something everyone's buying, you're buying from someone who thinks the top is in. When you sell something everyone's selling, you're selling to someone who thinks the bottom is in. Guess who's usually right? Let me share a concept that changed my entire trading career. It's called contrary trading, and it's stupidly simple. Do the opposite of what feels comfortable. When everyone's excited and buying, you should be cautious and selling. When everyone's fearful and selling, you should be greedy and buying. When a trade feels good because everyone agrees with you, it's probably a bad trade. This is counterintuitive. It goes against every social instinct we have. We're wired to follow the herd. In ancient times, if everyone was running, you ran too. Didn't matter why. Following the group kept you alive. But in trading, following the group gets you killed. The market specifically punishes herd behavior. It has to, because that's where the liquidity comes from. I started testing this. Every time I felt the urge to do what everyone else was doing, I did a quick check. Is this trending? Are people excited? Do I feel good about this because others agree? If yes to any of those, I'd either skip the trade or take the opposite side. My win rate didn't change much, but my profit exploded. Why? Because I was entering at better prices and exiting before the crowd turned. Let me show you what this looks like in practice. Bitcoin drops 20% in a day, everyone's panicking. Your group chat is filled with "it's over, sell everything, crypto is dead." This is terrifying. Every instinct says sell with them. But you check the data. Historically, after sharp drops, Bitcoin bounces. The crowd is always wrong at extremes, so you buy, not because you're brave, because the crowd is predictably wrong. 3 days later, Bitcoin is up 15%. The same people who said sell are now saying, "I knew it would bounce." They didn't buy. You did. You made money. They didn't. This is the power of going against the crowd. You don't need to be smarter. You just need to recognize that when everyone's doing the same thing, they're probably wrong. Here's another truth bomb. Trading influencers are not your friends. They're not giving you advice. They're using you. Think about it. Why is someone with 1 million followers telling you to buy something? If they really thought it was going to the moon, they'd quietly buy it themselves. They wouldn't announce it to everyone. They're announcing it because they already bought. Now they need you to buy so their position goes up. You're not getting a tip. You're being recruited as exit liquidity. I see this constantly. Influencer buys at $5, makes posts about it, gets followers excited. Price pumps to $8 on retail buying. Influencer sells at $8 to his own followers. He makes 60%. His followers buy at 8, it crashes back to 6, they lose 25%. Then the influencer posts, "Sorry guys, stopped out. On to the next one." No accountability, no explanation, just moving on to the next pump and dump. And his followers, they thank him. "Thanks for the try, on to the next." They don't realize they were the product being sold. This is why following popular traders is financial suicide. By the time they tell you about something, they're looking for an exit, not an entry. The most profitable traders I know don't have social media. They don't post their trades. They don't have Discord groups. They quietly make money while everyone else is performing for likes. Let me tell you about signal groups. These groups where professional traders give you buy and sell signals. Sounds great, right? Someone else does the work, you just copy the trades. Here's what actually happens. The signal provider buys at $10, then sends the signal to the group. 500 people buy. Price pumps to $11 on all that buying pressure. Signal provider sells at $11 to the group members. Price dumps back to 10. Signal provider made 10%. Group members lost money on fees and slippage. But the signal was right because it went up initially, so members renew their subscriptions. This is a legal pump and dump, and it's everywhere. Every signal group operates this way, whether they admit it or not. I joined 5 popular signal groups last year with small amounts of money, just to test this. Followed every signal exactly as given. You know what my results were? Group 1 down 32%. Group 2 down 18%. Group 3 down 41%. Group 4 down 23%. Group 5 down 57%. 5 groups, all claimed high win rates, all had testimonials, all had fancy charts and analysis, all lost money, because I was the exit liquidity for their trades. Meanwhile, the group owners, making money from subscriptions and from selling their positions to members. They can't lose, you can't win. This is what I mean when I say following the crowd guarantees you lose. The crowd isn't just wrong, they're being used. Now let me give you the uncomfortable part. If you want to make money trading, you have to be comfortable being alone. You have to be comfortable making decisions everyone else thinks are stupid. You have to be comfortable when your trade feels scary. The best trades I've ever made felt terrible at the time. Buying when everyone's selling feels like catching a falling knife. Selling when everyone's buying feels like missing out. Sitting in cash when everyone's trading feels like you're not even playing. But those uncomfortable feelings are the price of profit. If a trade feels good, If everyone agrees with you, if you're confident because the crowd supports you, you're probably about to lose money. I had a trade last year, bought a stock that had dropped 70%. Everyone said it was going to zero. Every analyst downgraded it. Every Reddit thread mocked it. My own friends told me I was stupid. I felt sick holding it. Every day I questioned myself. Nobody agreed with me. I was completely alone in this trade. It was terrifying. 6 months later, it was up 300%. The same people who mocked me were asking how I knew. I didn't know. I just recognized that when everyone agrees something is terrible, it's often oversold. Here's the framework I use now. I look for assets everyone hates. Stocks that are down 60, 70, 80%. Cryptos that people say are dead. Sectors that are over. Then I do my analysis. Is it actually dying or just unloved? Is there value that everyone's ignoring? Is the crowd wrong? If the analysis checks out and the crowd hates it, I buy. Then I wait, sometimes months, feeling uncomfortable the whole time. Then when price recovers and everyone starts getting excited, when people start saying, I knew this would bounce, when the crowd arrives, I sell to them. I buy from the fearful crowd and sell to the greedy crowd. That's the whole game. Let me show you why this works mathematically. When everyone's bearish, price is oversold. When everyone's bullish, price is overbought. This isn't philosophy, it's how markets function. Oversold means too much supply, not enough demand. Price is lower than it should be. That's when you buy. Overbought means too much demand, not enough supply. Price is higher than it should be. That's when you sell. The crowd creates these extremes. They panic sell together, creating oversold conditions. They FOMO buy together, creating overbought conditions. If you just do the opposite, you buy low and sell high automatically. It's literally that simple. But it's psychologically hard because you're going against everyone. Here's what I want you to do right now. Open your trading platform. Look at what's trending. Look at what everyone's talking about. Those are the things you should avoid or bet against. Then look at what nobody's talking about. What's down 50% that nobody mentions? What sector is everyone ignoring? Those are where the opportunities are. This doesn't mean blindly buy everything that's down. You still need analysis. You still need to understand what you're buying. But your starting point should be things the crowd is avoiding, not things the crowd is chasing. I'll give you a recent example. Everyone's excited about AI stocks right now. Every tech influencer is posting about Nvidia, Microsoft, OpenAI. Everyone's buying. You know what I'm doing? Looking at boring industrial stocks that nobody talks about. Looking at value sectors that everyone thinks are dead. That's where the next big returns will come from. Because when everyone's focused on AI, they're ignoring everything else. And ignored assets get cheap. And cheap assets eventually get expensive when the crowd's attention shifts. This is called rotation. Money rotates from overvalued popular sectors to undervalued ignored sectors. If you're always in what's popular, you're always in what's expensive. If you're in what's ignored, you're in what's cheap. And over time, cheap outperforms expensive, always, without exception. Let me address the fear you're feeling right now. But what if I'm wrong? What if the crowd is right this time? What if I go against everyone and lose? Here's the truth. You will be wrong sometimes. Going against the crowd doesn't mean you're always right. It means you have better odds. The crowd is wrong 70% of the time at extremes. So being contrarian gives you a 70% win rate on those trades. That's not perfect. That's just better than following the herd. You'll still take losses, but your wins will be bigger because you're entering at better prices. Your losses will be smaller because you're not buying at the top with everyone else. Over 100 trades, you'll crush the crowd's returns. That's all that matters. Here's my challenge to you. For the next 30 days, track what the crowd is doing. What's trending? What's everyone buying? What's everyone selling? Then do the opposite on a small account or paper trading. When everyone's buying something, sell it or short it. When everyone's selling something, buy it. Track your results. I guarantee you'll be shocked. You'll probably have more wins going against the crowd than you've had in months of following it. This isn't magic. This is understanding market mechanics. The crowd provides liquidity. Someone has to buy at the top and sell at the bottom. That someone is the crowd. If you're not willing to separate yourself from the crowd, you're volunteering to be that someone. Let me leave you with this final thought. Every successful trader has one thing in common. They're comfortable being wrong with the crowd or right alone. Warren Buffett buying stocks during the 2008 crash when everyone was selling. Alone. Michael Burry shorting the housing market when everyone thought he was crazy. Alone. Paul Tudor Jones selling before Black Monday when everyone was bullish. Alone. Every legendary trade in history was made by someone going against the crowd. Every disaster in history was caused by everyone following each other off a cliff. You have a choice. You can be comfortable with the crowd and lose consistently, or you can be uncomfortable alone and win consistently. There's no middle ground. The market doesn't allow it. Someone has to lose. It's either going to be the crowd or it's going to be you. So next time you're about to make a trade, ask yourself one question. Is everyone else doing this? If the answer is yes, run the other way. Your future profitable self will thank you.